The pandemic has changed our lives completely. It has forced me to relook at all aspects of my money. But are there opportunities in the making we should grab onto that will help amplify wealth in the long run? Let's talk about it. What's happening, everyone? Welcome to Think Finance. My name is Raj, and on this channel, I talk about personal finance, investment ideas, money management things, and all things finance. If this sounds like you, don't forget to subscribe. In this video, I want to share ways to boost your net worth and things you should do to improve your odds to take advantage of some of the opportunities that are brewing as we speak. Let's start with some fun facts. Here are some numbers from some of the wealthiest out there. Warren Buffett's net worth is $72 billion. Jeff Bezos is at $120 billion, and Bill Gates is at $99 billion. Apparently, Americans believe it takes $1.4 million to be considered financially comfortable. To be considered truly wealthy, that number increases to $2.4 million. This is based on a survey conducted by Charles Schwab. Link in the description. By the way, net worth is a measure of wealth. It is the difference between what you own, your assets, versus what you owe or your liabilities. I did a separate video on this. Link will be on the screen. So in a work from home economy, what can you do today to boost your wealth? Let's start with stocks and ETFs. Recently, the stock markets have dropped significantly. As of today, it is down over 30% from the highs. Stocks are on sale, and if you've been waiting for stocks to correct, this is your opportunity. Be careful though. Pandemic is still haunting us and recession is around the corner. Markets hate uncertainty, and my guess is we are going to hang around the low or even go lower in the next few months. I find it's best to stagger investing any new money, meaning invest a little bit at specific intervals, weekly, monthly, whatever works for you. Don't go all at once. Also, automate your investing. Platforms like Betterment and M1 Finance are built on automation. Finally, if you want to play it safe, focus on high quality stocks only. Link on the screen if you want to know where I am invested. On wealth potential gauge, meaning if you were to put new money in stocks today, what is its potential to boost your wealth in future? While I'm worried about recession, I still believe putting new money in stocks for next few months will give you the maximum bang for your buck in the long run and will amplify your wealth. Investing in retirement accounts. 401ks and Roth IRA are tax-advantaged accounts. Given markets are down, might be a good idea to go all in on these. These accounts give you access to diversified portfolios. If you're one of those who doesn't want to think about where to invest, retirement accounts give you access to diversified portfolios built by brokerage powerhouses like Vanguard and Fidelity. Personally, I don't max 401k since I prefer to have more control on my investments. I will only invest in 401k to get the employer match and put aside enough to get the maximum match possible. Also, now is the best time to do any Roth conversion. Remember, with Roth, you pay tax upfront, and then any gains in future are tax-free. Given the markets are down, this might be the best time to convert or roll over into Roth. Finally, as part of the $2 trillion stimulus or CARES Act, the required minimum distribution or RMD is suspended for 2020, which means you're not required to draw the minimum from your retirement accounts. If you have this set up automatically, you should think about putting a stop, since you don't want to draw your money out when the market is down. Of course, this depends on your cash flow and whether or not you need the distribution. Again, market has been beaten down, so potential to amplify wealth in future is high. Since typically you get limited control on where your money gets invested, I'm going to tag this as high on potential gauge. Now let's talk about gold. They call it the safe haven. Typically, when volatility spikes, investors run to gold. Something to be aware of, gold is trading close to its highest level since 2015. If you expect the market to go another leg down, this might be a good place to hide your money. Personally, I think short-term gains in gold are in. However, investment gurus out there recommend we should allocate at least 10% in gold. I am not invested in gold, find stocks and real estate more attractive. Which brings me to real estate. Over the years, real estate has been a solid way to build wealth. There are a few reasons to invest in real estate right now. Number one, Fed has pushed a lot of liquidity in the market, making borrowing and lending easier. Number two, interest rates are low, which can drastically reduce your mortgage payment. Yes, it has spiked up a bit recently, but it will be back in mid-threes. Finally, so far, housing market has weathered the storm well, and history suggests housing is pretty resilient in a recession. Here's my take on this. I would wait another 6 to 9 months before investing in real estate. If job losses accelerate, consumer and home builder confidence drop, it may impact housing negatively. So far, demand is high, supply is limited, home builder confidence is high, and interest rates are low. I see housing as a way to diversify your money. From just investment perspective, I would rather put new money in stocks given where they are. But if you wish to diversify your money, real estate is a safe bet. And don't forget, you could generate a rental income from real estate. If you already own a house, refinancing might be an option and could save money on your monthly payments. Even if it saves you $100, that can add to your wealth. Take that $100 and invest it in stocks every month for the next 30 years, and that can grow to $122K, assuming a 7% annual return, which is typical. HELOC is the other option to leverage cheap money and generate wealth. If you have equity in your house, you could draw a home equity line of credit or HELOC and maybe use that to fund your next house, which you can rent out and generate a new source of income. As long as your debt to income ratio is below 36, you're managing your money smartly. Smart debt management. Use credit cards to build credit and earn rewards, but don't run a balance on them. Interest adds up really quickly. In a low interest rate environment, refinancing your existing loans like a mortgage is a no-brainer. Any savings can be invested to build wealth. I already talked about home equity line of credit or HELOC and how you can use that to build another asset. Here's another example. I have a long-term portfolio with M1 Finance. They have an offering where I can borrow money at 2% interest. Of course, this depends on the size of my portfolio. This is almost free money which I can use to invest in my portfolio. Again, as long as you can keep your debt to income ratio in check, I think it's smart to use cheap money to build wealth. Other things you can do to improve your net worth: find other sources of income. We talked about rental income, freelancing in your industry, selling stuff online, side gigs. Learn a new skill related to your industry so that you can demand more dough at work. More income means more money to invest and build wealth. Now let's talk about things you can do to improve your odds with these wealth building tactics. Know your credit and stay on top of it. You should be at least 740 or more to get a good interest rate. Click on the link to learn more about how you can improve your credit score. Automate your world, automate investing, get emotions out of investing. Set it and forget it. Of course, adjust as needed. Also, automate paying bills so you don't fall behind. Have an emergency fund. As the economy hits a recession, chances are some of us will lose jobs, which means income source gone. Your expenses will still be there. Keep some money on the sideline to pay for your expenses. Well, sideline can also mean it's invested in safer bets like bonds. This way you can avoid taking on debt to manage your expenses. Finally, plan on protecting your family and wealth. While you're busy building wealth, what if things don't go as planned? Think about a term insurance and a will. I have a $1 million term insurance for $50 a month. Not bad. Okay, that's all I have, guys. Thanks for watching. If this was helpful, hit that like button. And if money gets you high, consider subscribing. Stay safe, and until next time, peace.